What's going on, everyone? Welcome back to Have More Than Money. In today's video, we're going to be talking about investing. So we're going to go into a couple of different investing strategies, long-term, short-term. We actually have a very special guest, our friend Michael Fragala, who is an avid stock trader. Mike, if you want to just introduce yourself.
How's it going, guys? My name is Mike. I am a day trader. I'm going to go over my strategies and where to find me a little bit later on.
Yeah, and so like Mike said, he does primarily day trade, but Mike also does do long-term investing. And so something else that me and Jared are very passionate and we really believe in is a long-term investing strategy. And so Jared is kind of the knowledgeable one when it comes to this topic. He's not knowledgeable about a whole lot of things outside of business and investing, but that's what we keep him around for. So Jared, why don't you introduce the method of investing that you prefer?
Yeah, guy, and just so you guys know, I'm glad Mike brought up that point that I'm not knowledgeable about a lot of things that aren't business or investing related, because if you're watching this and you feel like you're not smart because you're not getting good grades, or you feel like people have made you feel like you're dumb, just understand that you only need to know one thing to become really wealthy. You don't need to worry about algebra in high school or earth science or chemistry. Don't worry about those bad grades. As long as you put your time and focus into business and money, then you can make a lot of money regardless of how smart you are in other aspects of life.
Yeah, so before you go any further, Jared, I want to say a quote that Jared's always saying. I don't know if he got it from someone else, but he says, being good at things that don't matter doesn't make them matter. Yeah. So, obviously we're going to be talking about how to find valuable skills and utilize these skills in future videos, and even in this video we'll talk about stock trading, but I think that's definitely an important thing to note.
Yeah, and that just to give credit to the person who made that quote, it's Tim Ferriss from the 4-Hour Workweek. Probably one of the best books to get anyone's mind started into online business. So anyway, before
you get started, Jared, I just want one of the quotes that I live by. I'm not sure exactly where it's from.
Yeah.
But it's something I live by every day, and it's not about the knowledge you have, it's about the attitude that you have. Yeah. So just to go back into what Jared was saying, it's as long as you're willing to endeavor and learn about something new and be passionate about it and put everything you have into it, you can do anything you want. It doesn't matter how smart you are.
Yeah, and I 100% agree, and there's actually a great quote that's very similar to that one. It's attitude is more important than facts. And the reason why I believe that attitude is more important than facts is because ultimately your attitude will create the facts. I mean, if you have a positive attitude about your life, then the fact is that you will probably create a very successful life. So, in the end of the day, attitude over facts all day, every day. So back to the investing strategy. Hopefully we get to that at some point in this video. So the strategy that I use. So personally, I am not a day trader. I don't wake up at 9 a.m. or 9:30 to time the market. I don't look at stock patterns. I don't look at charts. I don't look at any of those scary things that you might think of when it comes to stock trading. I have no association with. I don't even own a suit, so it has nothing to do with that. But that doesn't mean that I don't own stocks. And as for a matter of fact, I own many stocks, ones that I actually couldn't even tell you necessarily what they are, but I could tell you what I do invest in are index funds that essentially spread my money across the market. So instead of picking Apple or Amazon or Google, what I invest in are essentially an index fund. What is, let's just say the S&P 500, it's 500 of the market's best companies. So instead of trying to pick which one's going to do best, what's going to outperform what I do is I invest in all of humanity. And ultimately, if you look at the records from when the stock market has opened until today, over a 50-year span, it is up. I believe the S&P 500 started at below $100 a share and is now at close to $3,000 per share. So it's like, if you invest in humanity, despite, let's just say, coronavirus, which caused the whole stock market to crash, it's already on its way up. And as for a matter of fact, up. If you were invested in a long-term stock like I am, and you just never pulled out, then you would have already probably made your money back from the corona. If you were invested in an index fund, of course. If you were invested in individual funds, then who's to say, some stocks are up, others are down. So ultimately, the strategy that I recommend, the one that I use today, is a well-diversified portfolio with a robotic advisor. The name of the company I'm not going to address because I'd rather share that only with our students. So I'm not going to address the name of the app or company I use, but what I will say is that what I believe to be a great way to invest is long-term index funds. Even if it goes down, like we said, during a pandemic, during a recession, as long as you hold for 10 years or more, and Mike, you were saying this to me right before the call, even if you were to invest in long-term investments, even if you invested at the peak points of certain decades, you would
Correct.
still be up today. So, before I pass this off to one of the mics, I'm just going to leave it as, guys, the biggest mistake you can make is not being in the market. It has nothing to do with trying to time the market. It has nothing to do with getting in on the right stocks or at the right time. All it has to do is with getting your money out of the bank, because the bank is not doing anything for you, and putting it into the market.
Yeah, and so just to kind of reiterate, Jared's method, I am involved in this same app that Jared uses. I actually don't have as much money in this investing account, but I do have some. And so just from my idea and what Jared and I have talked about in the past, weeks and months, is that, like he said, you're investing in the entire stock market. And so obviously if you put money in right before, the coronavirus hit, you were going to take a little bit of a hit. But the thing about the stock market in general is that it always goes back up at some point. And so, it's like common, I don't want to say common sense, but everyone's first reaction is take your money out as soon as it goes down. And that's just not what you want to do. Unless you desperately need that money to, buy food for your family or pay rent, then you should leave that in there. I mean, we put even more money as soon as this stuff, as soon as the market was down. You're buying stocks that are usually more expensive. And I think Mike will, get into this in his strategy. What goes down must come up. It sounds a little counterintuitive, but if it goes down, it's going to go back up. So don't worry about, losing your money, because you'll get it back eventually. Yeah. Jared, is there anything else you want to add?
I was going to say, before we discuss, Mike's strategies, the only time that I recommend to take money out of one of these accounts is if you were going to use it for something that can produce better returns. And the only two things that can produce better returns would be starting a business or buying real estate. So if you have excess money and you're putting it somewhere, use a diversified stock portfolio, because it will produce the best returns, and the only thing that will possibly really produce better returns will be real estate or starting your business. Other than that, just keep putting money in and just don't even look at it. Just keep putting money in.
And like Jared said, when you have money in the bank, not only is it just sitting there, but over time it's depreciating in value. And so obviously you don't want your money to be worth less.
Yeah.
We're about growing money, not having less money. So
think about what $1 could have got you 50 years ago as opposed to today.
Exactly. So, if you have a couple $1,000s that you never touch and it's just savings for down the road, put it in an investing app like this, and watch it go up over time. So that pretty much covers, I think, that first method that we really like. And obviously, just a little disclaimer, we're not professionals in this kind of field at all, so don't think that we're giving professional advice here. This is just advice from people who have had success in these methods of investing.
Yeah, and if you want to learn the exact app that we use, guys, join the community. The link is in the description, and it's also above this video. Join the program, work with me and Mike. We're happy to get you started. So. Yep,
and our community is havemorethanmoney.com. Like I said, check it out. We do a bunch of e-commerce. As you can tell by this video, we talk about investing, YouTube, we talk about it all. So check it out if you haven't already. Let's pivot a little bit into a different type of investing. Mike, I know you kind of have two different ways you like to do it. Why don't you start us off with introducing your day trading strategy?
All right, cool. How's it going, guys? I just wanted to thank Jared and Mike for having me. It's a pleasure. These guys are legit. So to start with my strategy, I'm a day trader. So I'm an intraday trader, which means I get into stocks and I get out of stocks the same day. So when Jared mentioned before that it's a bad trade or a bad play to not have your money in the stock market, that is correct if you're investing. Now, there's a difference between investing and trading. So when you're investing is for the long term, where you're going to let your money sit, you're going to let it compound. When you're trading, you're investing for the short term. So actually, compared to what Jared said about not having your money in the market is a bad idea. For investing, that is true. But for trading, not having your money in the market itself is a play on itself. It means that you are not trading for a reason, which it just, that's one quick example of why trading and investing are completely different. So to get into my strategy, what I do is I trade something on something called momentum. So what this is, every morning I wake up before the stock market opens, and I create a plan. I create a watch list. And what I do is I have a scanner, a paid for scanner that shows me all the stocks that are moving before the market opens. So when you trade stocks, usually the most beginner traders will trade from 9:30 Eastern Standard Time to 4 o'clock Eastern Standard Time PM. So what that means, the market opens at 9:30 and then the market closes at 4. So what I do is before the market opens at 9:30, I see what stocks are moving before that happens. So technically you could trade stocks at 4 a.m. Eastern Standard Time compared to the market open at 9:30. So
wait, so can you explain a little bit more about how you can do it at 4 a.m. if the market isn't open yet?
Okay, yeah. So it really depends on your investment broker that you use. So the most common brokers, I'll just go top 3 off my head, is Robinhood, which, excuse my language, is shit. And then you have TD Ameritrade and you have Webull. Robinhood is good for long-term investments. For beginners, it's good. It shows you what you're doing. It's very upfront, and it allows you to navigate like the stock market very well. And I think they're doing a great job at Robinhood, but it's just not something for an experienced trader. So what I use is I use TD Ameritrade, which allows you to trade stocks at 7 a.m. while Robinhood only lets you trade stocks at 9 a.m. before them. So the difference right there is you get a 2.5 hour jump on the market for TD Ameritrade compared to Robinhood, where you get a half-hour jump.
Okay.
So that let alone gives you an advantage. Also with Robinhood, you only get 3 day trades per week.
Really?
Yeah. So that can be really restricting for someone who trades like I do. So with TD Ameritrade, you're allowed to have as many day trades as you want, as long as you have the right account, which it can go into depth on what account that you have. You could either have a cash account or you could have a margin account. And just a quick definition of margin. A margin is like where you could take a loan on investments, where cash is everything that, say you put $5,000 in, that's how much you have. So when you do invest on a cash account, you're able to trade more, day trade more, because it's your amount of money. Like you don't have to wait. It's not a loan. It's less risky because you never want to. I could talk about this for days, but you never want to have a margin call, which is like when you loaned money, and let's say the bank is. It's like, for example, if you're into real estate and your house gets, what is it? What's the term when they take your house away?
Not evicted.
Foreclosed. When your house gets foreclosed. It's like the same exact thing. So you don't want to do. I don't mess with margin accounts. I only mess with cash accounts. But to go back to where I was, so what I do is I trade momentum stocks. So I use TD Ameritrade because it allows me to trade at 7 a.m. Webull is the other one that I was talking about, where it allows you to trade at 4 a.m. So that's 4 a.m. to 9:30. That's a crazy jump on the stock market. You're getting in way before other people are. So what I do is I scan the market for pre-market movers, and I set up a list for stocks that moved the most percentage in the morning. And what I'll do is I have a long list of things, like a few things that they need to check off on, like the amount of volume that's being traded, which is a whole nother topic to get into. So I'll create a plan in the morning, and then say, for example, a stock had a high of $8 pre-market, and then I check the charts, I watch the charts, I set up signals, and I use indicators. And when it hits a target price that I like, I make an entry. And I try to make at least 10% each trade, which allows me to accept risk and know that the risk is there, because what I'm doing is I'm creating a hypothesis every morning. I'm creating something that has happened in the past, and I'm hoping it'll happen in the future. Okay. And if it doesn't happen in the future for that specific investment, I'm able to manage my risk. So what I do is I set a 5% loss on every stock, no matter what. So if I take a 5% loss, right? And for example, today, 5 out of my 8 stocks that I picked were winners. So let's say I get 10% on each of those, right? So that's 50%. And the other 3, that's 15%. So I'm making 35% on the day if I follow my plan exactly. Wow. So It's just really, with day trading, it's just risk management pretty much. It comes down to risk management. It takes a lot of time because emotions always come into it. So it's just, it's a little difficult, but as long as you put in the time and work, you could do it. It's just completely different than investing, like what Jared was talking about earlier.
I think an important takeaway from what Mike said, which came at the end, is that you're not going to win every trade. I mean, that's it's very similar to starting a business, because you're not going to succeed with every business decision you make or even every business you start. And ultimately, using the past to determine the future is one of the best strategies, because as much as it isn't always correct, with business, it's very similar to say a product that is sold 10 times is most likely going to sell an 11th time too. So it's like, to use what the trends are telling you to dictate what you should invest in, it's a lot smarter than trying to use your gut or just gut feeling or just investing with emotion. I know that's something that me and Mike have talked about a lot, is keeping your emotions out of it, because in the end of the day, your emotions are where you're vulnerable. To succeed in business and life, you need to take a scientific approach. You need to be fact-based. You need to remove all emotion from the equation.
Yeah, I think you guys both. My two takeaways from everything you said, Mike, was exactly what Jared just said. One, maximizing your wins and minimizing your losses. So you have to acknowledge in any kind of business, it's investing included, you're going to take losses, and it's just so important. Don't get phased by them. Keep going and just try to minimize them. And the other one was the emotional aspect, and I think Jared hit it in the head. And same thing applies. You don't want to have emotions involved with any kind of, wherever your money is going, you don't want to use your emotions.
Exactly.
And that kills a lot of people. And so really quickly, Mike, where do you find stocks?
So what I do is I sometimes don't even know. Before I go, wait, just save that question. I just want to talk about one of the most important things that I went over talking about emotion, Mike, before we get past it, is once you accept that the risk is there, like when day trading, like I turned it into, it's like the cost of doing business, right? So that 5% loss is essentially the cost of doing business for someone like you guys who would be running ads, right?
Yeah.
It's the cost of doing business. It brings me one step closer to that winning trade, because I have to make that entry, and because it makes it, that cost of me taking a loss allows me to be available and be present for those big winning trades, those 100% gainers. You know what I'm saying?
Okay. So it's like an expense on a business.
Exactly. That's the only way to look at it. You can't lose confidence when you take a loss. You just have to keep going. That's all it really is. And what were you saying, Mike? I'm sorry.
Yeah, no. So my next question was, where do you find stocks, and what are you looking for when you're choosing a stock on the day?
Okay, so what I'm looking for is I'll share my screen in a second on a stock that I traded today, but I'm looking for between a 15 and 20% pre-market move. So what that means is, say the stock is at $2, right? I want to say it closed at $2 yesterday, yesterday, and then it opened up at least 220 to 240. So it's making moves, which means that there's buyers and sellers. There's a lot of interest in this stock. So that's what we really look for with the strategy that I'm using. You're looking for interest. You're looking for catalysts. For example, like Saturday. The best example is using stuff with like COVID and, like, for example, SpaceX. They had a launch on Saturday, right? They had a successful launch. NASA sent 2 guys to orbit, and their stock closed on 17 on Friday, and they had a successful launch, and they opened up at 20. So that would be a stock that I would watch because of that catalyst, that news. So it really comes down to the pre-market move, a catalyst, which is a news. It comes down to earnings. Like, a lot of stocks the past few months have been moving on COVID news. So like I have news indicators where if some company says that they're getting closer to a vaccine for COVID, that'll pop up, and those stocks just go through the moon, because that company will make so much money. Like, they get funding for COVID tests, the stock goes up 100%. So that's what I'm looking for.
So the stocks, so do those ones go up and then go down because they haven't found a cure yet, or do they just stay up?
Yes, that's exactly what they do. So that's like the risk management, where I take percentages as I go. So what I do is something called scaling. So the stock will go from, for example, it'll go from like $7 to like $9, and then so I'll take a percentage out. I'll scale 50%, which means I'll sell half of my position. You know what I'm saying? Say I buy 1,000 shares, I'll sell 500 of my shares when I'm up $1 per share. You know what I'm saying? And then I'll hold the rest and see what happens. And if it goes down to a certain level that I don't like anymore, a key level, then I'll sell it.
Yeah, it's almost like hedging a little bit.
Exactly. So I'm still, even if it goes down from now, I'm still going to be in the green. I'm still going to make money, and it allows me I learned like emotionally for me, like there's no way when you're trading that you're going to 100% throw out your emotions. I'm not a robot. I'm a human, you know? So what I learned is if I use the scaling method where I could like sell half of my position, 1/3 of my position when I'm up, it allows myself to stay in the position longer because I already know I'm up. I'm going to let my trades run now. I'm going to let them go higher and higher. And I'll set key levels where I'll sell. You know what I'm saying? It goes below 7, I'll sell. It's just
so the viewer gets a full understanding of this. So essentially, if let's just say you invest in a stock, right, and it goes up. If it goes up to a certain point, are you going to sell half? How are you going to decide when it's time to sell if it goes up? And then after, I want you to answer how you decide when it's time to sell when it goes down. Because obviously, I'm sure a lot of people that do this, a stock will go down and they'll say, oh, well, it's going to go back up.
Okay, so the way I sell, the way I scale is I use a 10% stop loss. If I use a 10% stop gain, which is like, it's just easier to reference it as a stop gain compared to a stop loss. It's really a stop sell or a limit sell. So what that means is if the stock goes up to 10%, I automatically will sell it. So what I'll do is I'll sell half of my position at a 10% gain or 1/3 automatically no matter what. And then I'll let it run from there. And then I use specific indicators like there's like lines on a chart, support and resistance. There's about 4 or 5 that I use. There's 1,000 and I use moving averages. It gets pretty technical because it's a technical analysis, but if it crosses below, like say I'm looking at a chart and it crosses below a specific line, that will be an indicator for me to sell. Okay. And the biggest thing as a trader, especially as a day trader, is you're never going to get the whole move. You're never going to get in at the low. You're never going to sell at the high. So it's good to take those 10%, like chip away at it, build your account, and invest in long-term stocks too.
I see. Mm-hmm. So essentially, if I was a beginner doing this, you would say invest while it goes up, and then once you see a little bit of a dip, then sell, essentially? Mm-hmm. Like always follow the trends?
Yeah, the trend is your friend. Like that's a classic line, but it's more like of that. When you're looking at the chart and you're using the indicators. Like for example, I'll let me share my screen just because I just want to give you one quick indicator that I use to show what I'm saying, because when I'm looking at a chart, there's lines on the charts. There's indicators showing me that this is a good time to sell. This is a good time to buy. Let me see.
Okay. Yep. And while you're pulling it up, quick question. How do you decide when it's time to sell if you see it go down from the moment you bought it?
So that's where I have the 5% loss.
So if you lose 5%, you automatically just sell.
Yeah, it depends. Like I have a 5%. When I enter a trade, guys, I automatically have a 10% sell point and a 5% no matter what. So say I enter a trade, right? I have it set up. It's like a template. So say I enter the trade at $1 we use, for example, just because it's easy. My stop loss automatically, right when I enter the trade, will be at 95 cents. Touch 95 cents, I'm out. And then my 10% sell would be at 110. But now I adjust these as the trade goes on, because sometimes I might have to bring that 5% down a little bit to a key level where it shows that my trade idea isn't working. You know what I'm saying? Like it shows that this idea is wrong. But as I go up, I'll move that, like as the stock moves up and goes in my favor, I'll move that 10% up. I could drag it on the chart.
Makes perfect sense. Yep.
Okay, yeah, and let's try not to get too technical on.
Yeah, that's why I don't want to show the lines. It'll get too crazy.
Yeah, I mean this honestly, guys. So for the viewer watching this, if you want to know how to take action, if you want to do again what me and Mike discussed in the beginning, and by Mike I mean Mike Lopez, the one on the bottom. If you want to do what we discussed in the beginning, then join the Have More Than Money program. If you want to learn more about what Mike Fragala is talking about, which is the one to the left of me, then feel free to follow him on Instagram. And we're gonna show it again at the end of the video, and we're gonna leave a link in the description. But follow him on Instagram at Day Trade Guide, right? It's Day Trade Guide.
Yes, sir.
Yeah. So follow him and DM him because he's happy to mentor you. Right now we are just getting started, but I'm sure 6 months from now or 12 months from now, we're gonna be very busy. We're not gonna be able to answer everyone. So right now is a perfect time. If you're watching this, now is the time to DM either him or us, because guys, what we're teaching, it's legit, it's working, it's what we're really doing, and it's gonna blow up. I'm very confident in that. So if you want to get in while you can, now would be a perfect time to again DM Mike Fragala at Day Trade Guide. His name is just Day Trade Guide on Instagram. He gives stocks of the day every day and a lot of great tips, a lot of value. I mean, for someone like myself following it, who doesn't really have much experience, I'm always reading the posts and they're always very valuable.
Thank you.
So I would definitely, like I said, I would definitely say DM him, because he's happy to mentor you right now. If you want to talk about that, Mike.
Yeah, just send me a DM. Any questions you guys have about anything, I'm happy to answer.
Yeah, for sure. And something I want to just add, honestly, Mike, you're giving some great info. I'm learning a lot just listening to you right here. So thank you for that. And I don't trade a lot of stocks. I don't really have any other kind of investing besides Jared's long-term investing. But from what I've read and learned and, everything that I've heard about investing in stocks, like Mike said, that the news is a really big factor when you're day trading, whether you're trading stocks or options. I personally don't watch the news because I hate getting sucked into,
It's just bad news.
Yeah.
it's always bad news. They're always throwing something bad in your face. So I don't watch the news for that reason. But if you are interested in, like I said, trading stocks or options, watching the news is very important. I think Mike used the word catalyst.
Yeah, I like that. Yeah. I like that word.
I love that word too, that, it impacts people's decisions when it comes to buying and selling. Right, Mike?
Yes.
I felt like I was going to have a question about it, and then once Mike used the word catalyst, I felt like it just answered my question.
No, exactly. And so, Mike, now that we kind of talked about the day trading aspect of your investing, do you do any other kind of, long-term investing when it comes to buying individual stocks?
Yes, I do. So what the goal is as a day trader is to build an account and then funnel the money in, is just as you guys will take your earnings and then put them into long-term stocks, because you want to see that compound. So yeah, I do. Not the same way Jared does. I invest on my own. I use my own strategies, but I do invest long-term.
Okay.
Awesome.
And so you'll buy like blue chip stocks or like maybe not blue chip stocks, but like stocks that are going to be around, and you'll just hold them.
Yeah, give an example of maybe some companies you bought.
So one of my favorite companies, obviously Tesla is one of the best companies out there right now. Everything Elon Musk is doing is unbelievable. He's just the smartest person on earth. I highly recommend. I called that out at 350 as a good buy, actually.
Wow.
And it touched 1,000, so that's what.
Did you hold on that, or did you sell?
So I sold, but
okay.
Bro, Elon Musk.
But I'm holding SpaceX, which is, like I talked about earlier, it's just a company that, like, for investing long term, a lot of people use different strategies. Like Jared uses that strategy, but a good strategy to use is buy stuff that you use every day, like stuff that has a demand, that'll always be a demand. Like, for example, like Coca-Cola, you can't go wrong with buying that and holding that. You can't go wrong, especially now, like CVS during the COVID-19. Like you can't go wrong with holding that, especially when they have dividends.
I saw there was like I didn't mean to cut you off, Mike.
No, you're good.
I saw there was like a viral Instagram post. It was like a really good one. It was like, it showed a picture of like a bunch of like the bad habits, and it was like, so like for instance, it was like Happy Meals, Coca-Cola, cigarettes, and it was like, stop buying these, and then it showed like McDonald's stock, Coca-Cola stock, Marlboro stocks. It was like, start buying these.
Exactly, bro.
And I really like that, because it's like people are gonna continuously buy all that shit. You can hold a gun to people's heads; they're not gonna stop buying McDonald's. But it's like,
exactly, it'll always go up, and it's just, as all of us probably know, McDonald's is not even about the food game; it's about the real estate game. But that's a whole different story.
The company's unbelievable, and honestly, I've always said that if anyone watching this, if you see an unbelievable location, all you really gotta do is stick a McDonald's in there, and you're gonna be making money. I mean, that's
it.
If you're watching this and you're considering opening up a restaurant, just open up a franchise, make it easy on yourself. No one's gonna want to come to your restaurant because no one's gonna know who you are. But if you open up a franchise, the marketing's done, everything's done for you. It just has to be a good location, and the people will come. I mean, listen, obviously some people are passionate, they have their grandma's secret recipe, whatever. But if you're someone like me who is a businessman and just wants to make money, then the best restaurant to make money is any sort of franchise. And right now, my prediction for the newest restaurant that will be hot over the next 10 years is Chick-fil-A. So that's 100%. Just my take. I definitely have considered opening up a Chick-fil-A in some areas near me.
All right, so we're gonna bookmark that Chick-fil-A idea, Jared, because I think we're gonna have to circle back to this in a couple months down the road.
Yeah, and if you watch this video, and you open a Chick-fil-A, I want royalties.
Maybe we'll drop an affiliate link at the bottom for Chick-fil-A franchise.
Yeah, we'll drop an address. You can mail the checks there.
No, but all right. So now we talked a little bit about long term buying individual stocks and holding them for the long term. Like Mike said, if you're going to buy products from a company, you might as well own a portion of the company.
Exactly.
It's pretty straightforward stuff.
Dividends.
Yeah. And so now that we talked about that, Mike, is there anything you want to add to the?
Just the fact that like dividends alone, like I didn't get into that as much as I want to touch on it. It's just if you buy a company that has dividends, for example, you're not only your stock is appreciating, but you're getting a payout quarterly. So what that means is, say it's the stock, you buy it for $50, right? And each quarter, there's 4 quarters in a year. Each quarter, you get a 5 to 10% dividend payout no matter what, right? So you're getting $2, let's say $2 per share. So that's $8, right? So now your investment is not only worth $50, it's worth $58, right?
Wow.
So you got that $8. And now your investment can even be going up in value, just the stock itself. It's like when you guys talk about like a real estate game, it's like you're getting paid from rental. Like say you own a house and you're getting paid, like you're renting it out, and the house itself is going up in value. So you're not getting only the cash from the renters, you're also getting an increase in value of the house. Exactly. So that's how I look at dividends, and I highly recommend investing in stocks that do have dividends.
Yeah.
Okay. I love that comparison, Mike.
Yeah.
I've heard the same comparison used a couple different ways. I think one time I don't know if it was about trading investments. I think maybe it was like trading options. And so you could either trade an option and, sell the cow, or like you said, something like dividends is you're milking the cow.
Exactly.
But you're getting both. So, you have the cow that you can sell at some point in the future, but dividends, you're milking it.
Yeah.
Exactly.
And I mean, being obviously very pro real estate, one benefit to real estate that Mike didn't mention is despite also getting the profit and also a lot of the time the house goes up, every time that you pay the mortgage, you're owning more equity in the home, which can eventually lead to a cash out refinance, which obviously if you do join our program and learn real estate from myself and Mikey, then what you're going to learn is the best thing to do is cash out refinance. Own a property, profit off the property, own more equity, get the money back, buy another property. 10 years later, you own 50 properties.
Yeah, and I mean, now that we're on the topic of real estate, really quick, we don't want you guys to think that you need, $500,000 or $1 million to buy your first home. The real estate method that Jared and I teach in our HaveMoreThanMoney.com community is remote real estate. So we look to buy properties in, remote cities like Cleveland, Kansas City, places like this where you can buy a house with just like $20,000 down.
Yeah, and I actually wire transferred the money today on a property. It was for the down payment and closing costs. It was $25,052, and now I officially own the building. The mortgage is about $450 a month after insurance and taxes. Before insurance and taxes, like $280 a month, just ridiculous. After insurance and taxes, it comes out to like $450. The rent is $1,500 a month. Never saw the property. Never even stepped foot in Cleveland.
It's fine.
I have a property manager. He collects the rent. If they don't pay, he kicks them out. I don't have to worry about anything. And ultimately, it's really just the most passive investment I can think of. It's essentially taking the money that what I would like to call dead weight sitting in the bank. If your money is sitting in the bank, it is dead weight. So if you have a surplus amount of money in the bank, and when I say surplus, I typically would probably mean anything $30,000 or above, I would say you need to start dumping that into a stock market account, which if it's a stock market account, I would say $1,000 or above, because so I almost exposed my secret app. The app that we use, you can start with as low as $500. So if you have $1,000 sitting in the bank, then throw that into the secret app, or better yet, contact us so you can learn it. But if you have 30,000 or more and it's just sitting there, the best thing you can do is honestly put that into a house, not one that you live in, because that's just going to keep sucking money out, but one that other people live in. I like to say, this is a quote that I honestly made up myself. I say, he who can own homes that other people live in will ultimately live in a mansion. And I really do believe that. I do believe that, because I truly do think that the people that live in the huge houses are the ones that own the smaller houses that others live in, The landlord, the guy that owns those other properties, is the one living in the big house.
100%.
So.
And so, as me and Jared have said in the past, and we'll continue to say, maybe starting a business isn't for everyone. We've talked about the responsibilities and the pressure that comes with starting a business. But as we've said before, there is no excuse for not trying to build your wealth. There's zero excuse, for the most full expression of life. You need to have a lot of money. Yeah. And I don't want to sound materialistic, but you do, like I said. And real estate is the biggest method to get ahead, to start building your wealth.
Yeah. And, another side note on that, too, is like, if you're watching this and you're like, oh, I love my job, I love my pension. Well, regardless of how much you love your job, everybody loves more money. So it's like, the real issue with people and finances isn't that people aren't making enough money, but the real issue is what people are doing with that initial amount of money that they make. It's like, if you're making 50 to 100 grand a year, then as long as you're doing the right thing with that money, then you can turn it into a lot. Don't count on your boss, don't count on your salary, count on yourself. There's no reason why you can't be making double the income as someone who has the same salary as you. It's very important. A lot of people, that doesn't stick with people. They think the only source of income, the only way they can make money is through their salary, and they couldn't be further from the truth. Me and the two Mikes here, we're not telling anyone to quit their job, but what we're saying is that if your only income is your salary, then you're living wrong. You're, as we discussed in the last video, what does job stand for? Just over broke. You're 1 or 2 paychecks away, 1 or 2 sick days away from being broke.
Exactly. And so that's why, assets. And if you are paying for a home and you're living in it, it is not an asset, because assets put money into your pocket. Simple as that. So like I said, if you're interested in the real estate game, find us. We'll drop a link below to our community. Let's pivot back. We kind of went on a little bit of a tangent there. Let's get back onto the investing track. I think we covered a lot of what we wanted to. Mike, I did have a question for you. I saw about a week or two ago something about Warren Buffett kind of dumping, like his company dumped a lot of airline.
They sold a lot of their airline stocks, isn't that? That's what they did, right?
That was
exactly. And so I wanted to kind of get your take on it from like a trader and a stock guy's perspective.
So as most of people know, the market dumped when COVID happened. So the market dropped to new lows, and everything crashed pretty much. Not everything crashed, but the U.S. economy was down because no one could do anything. No one could sell anything. Airlines were down bad because they couldn't sell anything. They couldn't sell tickets. No one wants to get on a plane. No one could do that. So the news that you're saying with Warren Buffett's company, Berkshire, news came out that they dumped or sold all of the shares in there. Like, they had a large holding of airline companies, which means that they were holding a large percentage of shares in these airline companies. And the problem with that is the news is not specific to what has happened. All the news said is that Warren Buffett's companies have sold all their holdings in airlines. So first of all, that's the problem with some news, is you never really want to change your investing strategy, not trading, investing long term, based on news that isn't 100% there. There's no meat behind that. If you know what I'm saying, like, you don't know when he sold them exactly, you don't know how much he sold them for. All the news said that, I think they said that they sold their airlines shares for a loss. So this could have happened, right? This happened I think a month back. So like maybe 2 months after the COVID-19 hit the new lows. So you don't know if they sold right when this happened. You know what I'm saying? You don't know when they sold them. You don't know how much they sold them for. So personally, I'm not trying to be biased, but I have an investment in a few airline companies that are domestic, because I saw them hit new lows. I saw them as undervalued, and I took a position on them because I cannot see the airline companies as a whole going out of business, because, especially domestic. So there's a difference between domestic and actually foreign, obviously, because no one's really going to fly out of country right now, but the domestic flights need to happen. The business people need to go places. People need to see their families. People need to travel. So I took that as that's a good investment for me. So I actually invested in airlines before Warren Buffett decided to dump his shares, or the news came out that he decided to dump his shares. So we don't know exactly when he dumped his shares, right? So the problem with news, like I was saying before, is how do we know, how does an investor know that Warren or that news is not out to drop the shares for that company to buy them back up at a lower price and then it go back up? Do you know what I'm saying?
Yeah.
Does that make sense?
No, yeah, it makes sense. I mean, the truth is, the problem with the media in general is that the entire media is controlled by such a small percent of people that the whole world almost revolves around very few people's opinions, what they want the world to think. And, Mike, that made me think of a great strategy, or better yet, a great thought of trading. And correct me if I'm wrong, but I feel like as a trader, your strategy should be 100% interior based. Like it should always be your strategy. That should never change. But the trades should be exterior based. Like, correct. And what I mean by that is the trades kind of have to revolve around what's happening in the world, because in the end of the day, you can't go against the tide of life. You gotta go with what the world's showing you, but at the same time, your strategy has to remain the same. Because if you just keep changing strategies, then ultimately you probably won't ever get anywhere.
Yeah, I agree. And like going back to like the investing thing that you were saying, like changing your strategies. Like for example, I post good investments. I don't tell people to make investments. I'm not saying buy this now, but I told people my investment strategy, and if they want to act on it, they can.
Yeah.
And I actually had someone invest in one of the airlines, and they got in. So what happened was the market bottomed out, right? Started to come back up. We'll use Spirit, for example, because it's a low price. So Spirit had a high of $60 in February, and then had a low of $7 to $8 in March, which is crazy. That's crazy. It's either the company sucks or it's undervalued. To me, it's undervalued. I went through all the earnings reports, all of the back end of the company, how they're performing, if they're making money or not, like all of that. And I noticed that to me, it looked like they were a good company and they were just undervalued. So I decided to take a trade on that. I'm not going to say the exact price I got in. We're going to say between $10 and $12 is when I made my move, right? And it ended up going up to like $16, $17 or whatever. And then Warren Buffett dumped this news came out that he's selling all his shares, right? So the average trader, right, would sell. But my position, my idea, my trade idea, my investing idea is to hold long term, because when the holidays come back around, people need to fly places. Those stocks are going to go through.
I mean, when this pandemic officially, leaves, airlines are going to quickly start going back up.
Exactly. And so long story short, I'm sorry I got off there, but one of my clients, or one of the people that is in one of my groups, took a trade on Spirit, and then the news came out, the catalyst came out that Warren Buffett's company is selling all the shares, and it went down. It went down close to $9 to $8, right? And when someone who's not an experienced trader would panic. Like they would sell. Oh, I don't want to lose all my money, I'm going to sell. Meanwhile, you're down 30%, 20%. I took that as, that doesn't change. Like, first of all, I don't know the meat behind it. That doesn't change my idea. That doesn't change my investing strategy. So I'm going to hold. You know what I'm saying? I ended up telling them that's how I felt. They were on the verge of selling, panicking in their car, driving to work, which is, go back, we can get into that later. But I advised them not to sell. I said, if you want to sell and lose money right now, that's up to you. But personally, I am not going to sell. And lucky enough, they did not sell. It's back up to $14 or $15 now because that news passed. So that's just another thing with emotions. Like, emotions come and go with the market, and you just got to be able to, you're not going to be able to block out your emotions, but you got to be able to control them and not let them make decisions for you in a way.
Yeah, control your emotions, or let your emotions control you.
Exactly.
And I think that it's just a great point to make, that at the end of the day, it came down to you and your members of your group to decide, is Spirit going to go out of business in total? Because that's really the only way that you would lose. Mike, right? Correct me if I'm wrong.
Yeah, no, 100. Yeah, you're right.
It's like, eventually, like you said, when the holidays come around and when all this coronavirus madness is behind us, the stock is going to, people are going to travel and people are going to buy Spirit Airlines, and it's going to go back up.
Correct.
And so that's something that I thought about. Like I said, I did a little bit of investing. I actually did buy some airlines and even a couple of cruise lines, which I kind of regret, because now I'm thinking, wait, is this cruise line going to go out of business?
Yeah, but cruises are.
Depending on what the cruise line is, you should be fine, because I was, for the most part, like I said, it's a hypothesis. You never really know what's going to happen in the market, but people are booking cruise lines for 2021. So, I mean,
Okay.
you could have just got it really on sale.
But cruise lines are different than airlines, obviously, because cruises are much more luxurious, where airlines are much more necessary.
It's a commodity compared to a commodity. Yeah.
And one thing I like that you said, Mike, and I think it's very important to the viewer, is, everything we say, guys, it's ultimately your decision to follow it. What me and Mike Lopez teach as far as drop shipping, we can only discuss on behalf of our results. We can't guarantee results for anybody the same way, Mike Fragala here said it. The trades that he, gives out on his Instagram, he's not guaranteeing they're going to go up. It's just his mind. It's his thoughts. You don't get mad if you follow one of his trades and it doesn't go up, because honestly, the kid knows what he's talking about. Sorry, the guy, he's not a kid. The guy knows what he's talking about. And I truly do believe that statistically, if you do follow his advice, you will win. But you're not going to win 100% of the time,
Exactly.
Don't take one of his trade advice. Don't take one and fail and think, oh, he's flawed. Let me see you listen to him on 50 trades, and then we'll see what your percentage is of being right, Because in the end of the day, like we said, you're not going to do well. In certain aspects of life, you'll fail more often than you'll succeed. In stock trading, it shouldn't be like that. I believe, what is it? You should go up on what, like 7 out of 10 trades, or what's the number on that, Mike? Typically.
So when the percentage that I use, and it's crazy, and some people don't believe me, but if you go through the Excel format and you go through the sheet and you do the calculations, as long as you're using my percentages that I use, the 5 to 10%, and usually I'm not just taking home 10%. Usually it's more than that. But if you win, if 4 out of 10 of your trades go the right way, go your direction, and make at least 10%, you'll be consistently successful.
Wow.
That's 4 out of 10. That's getting a 40 on your test.
Yeah.
And you'll make money.
Exactly.
It's crazy. It's just that people don't have discipline. People can't control themselves. And it's something you have to work at as a trader, as anyone. You need to. It's nothing comes easy. No one's going to be where they want to be right away. Like, one of the famous things is Einstein failed 1,000 times in his 1,001st.
Yeah.
What is
I think it was Thomas Edison.
Yeah, whatever it is, but it's just 1,001st. That's the idea that you have to fail in order to succeed, and I think we all know that here in this group, Mike and Jared.
Well, I think that one takeaway for the viewer is that a lot of people, when they think of stock trading, they all think of get rich quick. Everyone thinks about that, and ultimately, what you're doing can get you rich quick. But I think what people need to realize is, to get to that point when you're making big money quick takes a lot of experience, a lot of trading, a lot of failed trades. I mean, Mike, how many trades would you say you've made at this point of your career?
Over 500.
Over 500. Trades. So, you guys got to understand that. Like, if you want to understand trading and make money quickly trading, he's done over 500 trades, and the people that are making much more than he is have probably done over 5,000 trades or more.
Exactly.
So it's like, if you want to make, obviously everyone thinks of, oh, I bought it at $4 and now it's at 10, 2 hours later, I'm rich. Like, if you want to keep doing that time and time again and actually trade for the long haul and be successful, it's going to take time and perseverance and discipline. Like, for you to make huge, obviously we all see stock traders making $10,000 in a single day. The guys that done that, have, how many trades have they made in their life, And just so you can see, Fragala over here has made over 500. So it's like, if you're watching this and you want to understand why you're not successfully trading, well, then I challenge you to do 500 trades before you actually question if it's legit or not,
Exactly.
Let's see you do That's 500 great. Trades, and then you'll know how to trade.
And I love that we found ourselves here. I think any conversation that Jared and I have, or me, Jared, and Mike, any conversation we have about any kind of business always ends up at the mindset portion. Yeah. Because I genuinely, and I think I can speak for all three of us, in that any kind of money-making thing that you're doing, whether you're starting a business or you're investing, there's always going to be a mindset aspect to it. And it may sound super corny, but the three of us have results in our respective in what we specialize in, and we will all a big part of that to mindset. I think Mike and Jared, you guys both touched upon it really perfectly. Hardships are going to come no matter what. And Mike, you said that quote. Me and Jared personally, before our high ticket store started taking off, we tried so many other business models. We lost over, $15,000 to $20,000 trying things, but at the end of the day, we found something that works. And so, for me and Jared, it was drop shipping. We duplicated that. And for Mike, it was investing. He found an investing strategy that worked for him. And Mike, was this your first strategy that you stumbled upon in investing?
No. There's a few different strategies that I used, but this is something that worked for me. There's a million different strategies that someone could use, like you were saying before. It's just something that you fit. That's your niche. You fit in there.
Yeah. No, exactly. And you found what works for you. And going through the crap that didn't work, failing is awesome because now you can check that off. And so whatever you fail in, you're now like, all right, I'm one step closer to finding that winning strategy.
Exactly.
Per se. Mike, I don't know if there's any other kind of thing you want to add on to mindset in terms of investing.
The market can be could really give you a beating. It's never forgiving. The market does not forgive you. It could take everything you have. So one thing that I just would leave off with, I would say just risk management is key. Make sure that you know what's going on. Do not make trades that you don't know how to get out of or how to get in. And number one thing with trading and day trading, it's just manage your risk and know when to get out and know when to get away from that trade and put it behind you, because I've seen people blow up accounts because they relied on hope in the market, and there's no hope in the market. There's no hope. If your stock's down and you hit your target level to sell, you lost your max amount for that specific trade, if you have hope in your mind, automatically sell, because you can't hope that it's going to go back up. You have to have something that shows you that it's going to go back up. And if your trade idea is wrong, just get out of it. Hope is no good in the market. Hope is good in life.
And like we said, leave those emotions at the door. The
market is a cold place.
It's a cold place, man.
One thing I want to say, just in regards to the entire video, is ultimately, guys, in life, the person that succeeds more is the one that actually failed more. And that's, a concept that a lot of people don't understand, is that whoever that is finding the most success is ultimately probably the person that has also failed the most. And I truly do believe that, whether it's with trading or business. It's like the people that I know that had 4 failing businesses are usually the same one that have that one successful business that's made them a millionaire. The people that are making hundreds of thousands and millions of dollars stock trading are the same ones that have had thousands of losing trades, So it's, ultimately, if you're someone that isn't finding success yet, it's probably because you haven't failed enough yet.
Mm-hmm. Yep.
Couldn't say it any better.
And like I said, that just ties perfectly into our whole idea of things, like you said, of failing and then really succeeding. Something that me and Jared always say, to our clients and to our mentees is that, if you really want to succeed in one aspect or, one thing, the best way to do it, so many people let their pride get in the way. And so they're like, I want to do this on my own. When in reality, the best way to succeed at anything, whether you're drop shipping, if you're drop shipping, you want to be good at drop shipping, then you need to find someone who's good at drop shipping. If you want to learn how to play guitar, you're not going to ask me or any of us how to play guitar. You're going to find someone who plays guitar. And so, where I want to go with this is, listen, if you want to get into long-term investing of stocks or day trading stocks, follow Mike. He's at Day Trade Guide. We'll drop his Instagram ad below. If you're interested in remote real estate, which we touched upon, we'll put the link below to our community, havemorethanmoney.com. If you want to learn about long-term investing, we really have it all. Find the people that you want to learn from who are doing it and learn from them. And that's exactly what we're offering.
Yeah, and guys, don't get shiny object syndrome. What shiny object syndrome is you start one thing and then you see the next shiny thing and you try to start that. If you want to day trade, then go all in with day trading. If you want to do e-commerce, then go all in with e-commerce. If you want to do real estate, honestly, you really can't go that all in with it because it's more of just like a passive investing thing. But go all in with it. The truth is that you need to succeed at one thing at a time. You can only succeed at one thing. I used to have so many friends that would start 6 businesses before his first one even took off. And I'm like, dude, you can only make one business succeed at a time. So again, if you want to do e-commerce, real estate, or YouTube, please join the community, havemorethanmoney.com. Me and Mike are very happy to mentor you. If you want to learn how to day trade or even long-term trade, probably arguably the best way, then follow Mike Fragala to the left of me. His Instagram, again, is Day Trade Guide. Also, guys, hopefully we do want to eventually bring Mike over here into the More Than Money program. So subscribe to our YouTube channel because we'll definitely be seeing more of him. So if you want to watch his, stock videos, or if you want to learn more, just subscribe to our channel because, we're going to be having him on the show, and we're going to be teaching a lot of great money secrets in the future videos coming.
Yeah, I think you guys will definitely get used to seeing our good friend Mike. Mike, thank you so much for joining us.
No problem.
Like Jared said, if you guys have any questions, drop a comment below, like this. Be sure to subscribe to see more of this beautiful man, Mike Fragala. Like I said, thank you, Mike.
Thank you guys for having me. I really appreciate it.
Yep, it was great. Yeah.
Of course. And we'll see you guys in the next video.
Yep. And that's a wrap. That's fire. That was a good one, yo.
I think that was fire.
It was fire, yo.